So guys, today's message is pretty simple. You cannot escape volatility. And why am I bringing this up? Because you see, I was looking at my portfolio and I realized that I'm 100% invested in stocks. Okay, not 100%. I still hold some cash, but like 98%. And the problem with that is that this creates a very strong feeling of instability, of unsafety, because a stock might be trading at $5 today, at $4 tomorrow, and well, at $7 next week. And I was commenting about that with some friends of mine, and it's funny because they all said the same thing. They said, man, just chill out and put your money into Brazilian treasuries. And by the way, I live in Brazil. And Brazilian treasuries are actually paying like 14% per year. So they said, man, just put your money into treasuries. You'll make 14% per year without doing nothing, without needing to worry about volatility, and without any risk. And I was like, I looked at them and I could only think, man, these guys are crazy. I don't think they have any idea of the risks they are taking on. Because you see, for me, to invest in treasuries, corporate bonds, to invest in fixed income is kind of like investing in stocks. Now, did I get crazy? No. Let me explain what I mean by that. What I mean is this. When you invest in fixed income, the truth is that the underlying asset is the currency. So I know that you guys will understand that pretty well because I know that my audience comes from the US, Australia, Europe. So most of you guys simply don't hold any Brazilian reais, right? And I bet that most of you don't think it is a good idea to send your precious dollars and euros to Brazil, even though treasuries are paying 14% per year, right? Because you know that there's a lot of currency risk, especially if you are aware of the fact that the Brazilian government is completely overspending, taking on a ton of debt. Okay, so things are definitely not going well. So yeah, we could see the Brazilian real devaluing, losing value because of this context. So you know that, okay, you could send your dollars to Brazil, you could buy Brazilian reais, but what if the dollar in Brazil skyrockets? What if the dollar goes from the current 5.2 Brazilian reais to like $7? Well, then you could pretty much say goodbye to your wonderful gains, right? They would have been completely erased. Oh, but you can hedge your position. Yes, that's true, but you see, if I need to hedge my position, I actually simply prefer to reduce it or not to invest in that asset at all. I don't like hedging. So you know that to invest in Brazilian treasuries, for example, has a lot of risk. And I'm here talking about the Brazilian real, but the same applies to fixed income all over the world, because the truth is that fiat currencies are devaluing a lot and very rapidly. That's why gold is going up. So that's what I mean when I say that to invest in fixed income is kind of like investing in stocks, because the underlying asset, when we are talking about treasuries or corporate bonds, the underlying asset is the currency, and the currency works just like a stock, for example. Just like a stock will lose value if the company starts burning cash, taking on a ton of debt and diluting shareholders so the CEO can travel the world. Just like a stock will lose value if that happens, a currency will also lose value if the management team of the country, that is the government, which is composed by politicians who don't have any incentive at all to be fiscally responsible. So the same thing will happen to a currency if the government screws things up financially. If the government starts burning a lot of cash, taking on a ton of debt, if it starts printing money. So the same thing that happens to a stock also happens to a currency. So in the end, for example, Brazilian treasuries, right? So in the end, to buy Brazilian treasuries because they are paying 14%, for me, is the same thing as buying a terrible stock that is paying great dividends, right? I mean, I simply prefer to invest in stocks I like and I think that have good prospects. For example, Reclaim, right? I mean, if on one hand, the government doesn't have any incentive to deliver positive numbers, man, Reclaim CEO owns 35% of the company. So this guy has all the incentives in the world to make this company succeed and to make this stock appreciate, which would benefit me a lot, right? And by the way, Reclaim is listed on the TSX Venture, ticker MyIDF. We've already covered this stock here on my channel before. I've already made several videos about it, okay? And it is one of my main positions. But that's why I'm 100% invested in stocks. And that's why I'm saying here that you cannot run away from volatility. You can only choose where it comes from. Now, regarding my volatility problem, I think that it's much better for me to, rather than invest in fixed income, I think it's much better for me to simply invest in less volatile names, right? So that's how I think about investments. So that was the message today. You cannot escape volatility. And well, that's why I'm 100% invested in stocks. Because for me, everything kind of works like a stock.